It is a pleasure for me to deliver this video message for ICMA's annual general meeting. I would like to use my remarks to highlight a couple of challenges faced by financial markets and financial market infrastructures, challenges that are of key importance for the ECB. We are currently witnessing a transformation in capital markets, in part linked to the regulatory agenda. This is increasing demand for collateral, in particular collateral of good quality. Thus, ensuring an adequate supply of collateral assets by both financial and non-financial institutions has become an important policy issue. All efforts to create good and fairly safe assets that could be used in various collateral systems are therefore welcome. Let me make 3 points in this respect. First, the best way to make financial assets safer is to improve the quality of the underlying income stream. This starts with government bonds. Continued fiscal consolidation and structural reform, leading to lower debt to GDP levels in EU countries, are the surest path towards recreating a steady supply of safe assets. This process is now on track. It should not be unraveled. Second, securitization has a role to play. Securitization transforms illiquid loans into more liquid assets. Thereby, it has the potential in principle to increase the supply of high-quality collateral available to banks to support other transactions and to provide a complement to government debt, for example. Currently, securitized assets are mainly used as collateral for repo transactions with central banks, particularly the ECB, and in private markets. For securitized assets to play a wider role and diversify the supply of collateral, they would need to have certain features. In particular, there would need to be significant improvements in the liquidity of securitization markets, as well as increased confidence in their prices. In a joint discussion paper, the ECB and Bank of England have identified some of the roadblocks on the way towards a new, high-quality securitization market. As the banking sector deleverages in a post-crisis environment, a shift is taking place in Europe towards more market-based financing. In this context, revitalizing securitization as a sustainable funding and investment tool allows capital market solutions to complement the bank channel in financing the real economy. Third, in view of the limitations on high-quality collateral, we also need to focus on efficiency, in particular the availability and the use of collateral. The Eurosystem's T2S project, Target 2 Securities, which creates a single securities settlement platform, is scheduled to go live in June 2015. This will offer banks a single gateway for their collateral and will greatly improve conditions for availability and usability of collateral. Considerable work in this field has also been carried out in recent months by the ECB in cooperation with its contact group on Euro securities infrastructures, the COGESI. We have identified 4 concrete actions which should be implemented in 2015 where possible and by the end of the T2S migration at the latest. And these are extending operating hours of CSD links for central bank money settlement, enhancing settlement practices in commercial bank money, settlement interoperability for tri-party repo products, in other words, for mobilizing securities via interlinked tri-party collateral management systems, and extending settlement times for end-of-day collateralized treasury adjustment operations in central bank money. These actions, stemming from the COGESI work, coupled with the Eurosystem collateral enhancements of this year and the launch of T2S next year, create the conditions to better support a fully integrated Euro repo market at infrastructure level. Let me conclude. The ECB has a vested interest in well-functioning capital markets in Europe. Capital market solutions help create good collateral and channel savings to the real economy. They complement our collective efforts to strengthen banks, and they thereby improve the transmission of our monetary policy. I thank you for your attention and wish you an interesting and productive meeting.